Ladies and gentlemen, what is going on? Welcome back to the channel. Thank you guys for being here. If you are a first timer to the channel, then welcome to you guys. Thank you for tuning in. You are about to change the way that you guys trade in the stock market. If you like what you're seeing, make sure you guys click on that subscribe button and hit that bell. The bell sends out the notifications for when I send out the videos just like this one every single day. This is the watch list for Thursday, December 8th. Like I said, I send these videos out for you guys for free every single day. We're going to get through this watch list in just 1 second. I'm going to go through a few quick things. Number one, I'm on Twitter at Mr. Clark Griswold. If you're there, you can find me there. Ask questions, comments, whatever you need, ask there. You can do the same thing down below in the comment section. If you have questions about this stuff, anything that we're doing here, any setups, leave them down below. I will get back to you usually the same day. Or get in on the Discord. I have a Griswold Trading Discord. The link is in the description below. It's free to join into that Discord. There is a paid membership portion. That paid membership, it's $50 a month or 2 months for $100. You get the third month free, and it includes a ton of great things. Okay, a top 5 out of the watch list that I send out every single day, the members get that. They get access to the Griswold Strat indicator that I've created for you guys. All the Strat indicators wrapped into one. It includes one-on-ones with myself through Google Meets. If you guys have questions, you want to connect, talk to me directly, the membership gives you access to that. The live trading bots for SPY, QQQ, DIA, Tesla, Disney, a bunch of other tickers, gives you trades on the 5, 15, 30, and hourly, so you don't have to go searching for them. They come directly to you. That is part of the Griswold Gold membership. It includes a 1-hour Strat course that I've created for you guys in that room as well, and a bunch of other really great things. TradingView, guys. If you don't have a setup like this, TradingView, there's a link in the description below. You can try out TradingView for free for 30 days. That's their sub-services, so their top-of-the-line service that they offer you guys. You can try it out for free for 30 days. If you decide to use it, you get up to $30 off of that subscription, but you need to click on the link down below in the description and take advantage of that free 30-day trial. Let's get started on this list. The first one I've got on here, guys, is NEO. NEO has a 2 down that finished green and a hammer candle. So that's kind of a hammer candle. This is more of a hammer candle. This is a good-looking hammer candle. This is not. And again, I'm glad that we have this because off of this hammer candle, we look for things to trend up because it's a bullish pattern. But it doesn't always happen that way. Probabilities say yes, but the probability is just that. It's a probability. There is an element of error in there. And so you can see here, we trended down. We had a 2 down green, just like we did here. We're going to look for this to trend back to the upside, 2 down green. So a 2 down is basically a directional candle. It only broke the low of this previous candle. Only broke one side. It was to the low, so therefore it's a 2 down. But when we finish green on those 2 downs, that gives us probability that we are going to trend back up on this. It means there was buyers there, okay? So we can look for calls at $12.72 as the trigger point. Strike price, you'd be looking at $13. First target, I know it's hard to see. There's that green line. It's not moving. There's the green line, okay? That target is at $13.28. The blue line you see, that was what the 1 month trigger was to go 2 up on the month, which we have done. I will preface and I will let you guys know that I am in on this for the long haul on the monthly chart, expiry of January 6th, with a strike price of $13.50. So I hit that here. I'm practicing patience with this stuff, so we're going to see if we can trend back up on NEO. We're going to move to SPY. SPY finished inside bar. So I had a one-on-one with somebody today. We looked at SPY and these inside bars and how they set up. And for the most part, guys, SPY tends to gap up or down off of these inside bars. So we go back and look. There's a gap off the inside bar. Another one, gap off the inside bar. Another one, this one gapped up here off the inside bar and went outside bar. Okay, here's another one. Inside bar, gapped. Inside bar, gapped. So the tendency off of the inside bars for SPY is to gap. Now, if you want to know how to play the gaps at the end of this video, I will give you a gap video to watch. So what we mean by gap is what's likely to happen tomorrow is we open up below our trigger, like so, okay, down there, or we trigger above, like so, okay, so we open up somewhere here. We're above the trigger price. So I will put a video out for you guys at the end of this one. You guys can learn how to play the gaps. It's really simple. It's really easy. So SPY, we can look, if it doesn't gap, if we open inside, which again is not likely based on history, we can look for calls at 395.64, puts at 391.97. SPY has an expiry on their strike prices every single day, or on their option plays every single day now, Monday through Friday. It used to be 3 days a week. Now it's 5 days a week. I like to play 0-day expiries if I can, but I'm comfortable with that. For you guys, if you wanted to take a Friday expiry or an expiry sometime next week and give you a little bit more time on there, a little less theta burn, by all means, go ahead and do that. So that's the setup on SPY. I'll tell you right now, guys, the top 5s that go to the Griswold Gold members, they will have SPY and NEO on there, because anytime SPY or NEO has a setup, I put them in on the top 5. The other 3, they're a mystery. You may have to find those out by getting the membership. MU, Micron Technology, 2 downs. We talked about that. 2 down that finished green. We're going to look for calls at 54.24. First target is 54.63 on MU. GE, inside bar. And I know that's hard to see, that yellow there, but this inside bar shows the yellow. So listen, guys, the time frame continuity indicator, which is here, everything's pointing to the downside outside of the quarterly. This is part of the indicator I created. These yellow inside bars and white outside bars, as well as the gold highlights for the 3-1 setup, this 3-1 setup as well, that's also part of the indicator that I've created for you guys, as well as the candlestick numbers. Now, let's talk about the inside bars for a second for anybody who is new to trading this strategy, or just trading in general, or if you're struggling. So inside bars, and I know this one is really hard to see because it's basically there's the body. If I zoomed in, basically the open and the close was the exact same spot. It's sitting right here. So inside bars, they don't break the high and they do not break the low of the previous candle. They stay within the range. It's a tightening range. And I've started to do this. It's consolidating, and basically what we're looking at, guys, is a inverse broadening formation. Some people call it a flag. It's an inverse broadening formation. So when this next candle opens, it's looking for that breakout of that inverse broadening formation. So we can look for calls at 86.08, puts at 84.82. First targets are marked out. Now when you see these yellow bars, guys, I want you guys to think of a spring being compacted, tightened, loaded, whatever you want, something being squished down that has pressure with it. And when you release it, it's going to explode to one direction or the other. And we go back and look in time at previous inside bars to see how these set up. And again, they're very, well, the 3-1 setup is rare, which is what we're looking at. But even if we go, let's go look at, try and find the last time we had a 3-1 setup. We have to go back to July of this year. And again, it gapped down, so it wasn't a great play. Here's another one, 3-1 setup. This one gapped down. So again, end of this video, make sure you guys are watching. I'll show you guys how to play those gaps. Very, very simple. Another 3-1 setup. This one opened here and triggered in reverse, so a failed 3-1 setup. But most times off of these inside bars, guys, probability tells us, here's an inside bar, we had a really big run down. Here's an inside bar, we gapped. Inside bar, gapped. Inside bar, gapped, but we had a really nice run up. Inside bar, and we get these big runs down regardless of whether they gap or not. Here's another one that opened, and looks like we just hit target. So the inside bars are a high probability play. Whether they gap or not, we get these big runs off of these inside bars. So it consolidates, and then it picks a direction, and it usually has a really nice trend to it. So inside bar, trending down. Inside bar, trending down. Okay? So that is the setup on GE off of the 3-1, and we went through the calls. Time frame continuity is all to the downside. Now there's a lot of inside bars here on the weekly and the monthly. Cyberdog wouldn't be touching those. He doesn't like to touch them. Doesn't mean they don't work. Okay? Nike, inside bar on Nike. We can look for calls at 109.12, puts at 107.06. Let's mark that target to the bottom side down together at 106.75. That's the setup on Nike. Cat, not something I usually put on here because the spreads between the bid and the ask are too far apart. I usually like to see about 5 cents or less when I'm taking my scalps or my day trades, just because I buy market order and I sell market order, and if the gap is too far apart, I'm not willing to get into a trade that's down 5% or more before I even jump in it. Limit orders, yes, you can take the limit order. It might not get filled. You might miss the trade. That's why I like high liquid stocks where the spread between the bid and the ask is very tight. If you want more information on that, let me know down below and I can get it to you. Caterpillar, inside bar, calls 229.84, puts 225.78. Airbnb, 2 down, I think this one, finished green. Hammer candle, I'd like to see that body a little bit smaller, but sure. And normally we would put this target at the top, but because there's a gap, meaning there's nothing in between this candle and this candle, there's a space there. So when we have that, the gap fill becomes the bottom of that candle that it gapped from. The next target goes to the top. Now I don't think we get to 98.50 on Airbnb. I mean, anything's possible. This was a big candle. It is possible. I just don't think we get there. And the other thing I want to tell you guys, be very cautious about. This would not be a high trade setup, like an A+ setup, because a lot of times what happens, we'll open, we'll come and we'll hit that target, just like so. Okay, so it did what it said it was going to do, triggered, hit targets, but then it'll reverse and we'll come back. And you guys have to be able to be prepared to take profit at that target, because a lot of times, high probability, we'll hit that target and it'll retrace and we'll never see it again. Okay, it'll never get back to that point and now you're stuck in a losing trade. Okay, so make sure you're getting out of your trades. And I don't care if you're up 5% or 500%, get out of that trade. Don't stay in it. Make sure you're cutting your trades when you hit your targets, or you're reversing through your targets, or the candlesticks stop you out on a reversal. Okay, we set our triggers and our targets on these high time frames, and then we go down and manage it on a lower time frame, like the 15, the 30, the 15, the 5, whatever suits you best. Okay, 2 down green on Amazon. We'll look for calls at 89.89. First targets at 91.04. Barcat, this one's for you. I'm hoping you're watching this video because you said you were going to start watching them. Barcat's part of the Griswold Gold membership. Amazon is one of the things he likes to play. AMD, Tesla. Okay, so here's the setup for you, man. Trigger at 89.89. First target at 91.04. BA is Boeing. Boeing 2 down green. We'll look for calls on Boeing at 178.43. A lot of meat on this bone. A lot of room for this to move from this trigger to this target. So BA, that's your setup there. 2 down green on BAC, which is Bank of America. So again, a lot of meat on the bone. We'll look for calls at 32.92. And again, guys, if you're buying common shares, by all means, take common shares on this 32.92. And realistically, you guys don't need to hop down to a smaller time frame on this. You can for common shares, but you can use the bottom of this candle as your stop loss if you're using common shares, because really you're only looking at a 50-cent loss per share, which isn't a whole bunch. Now I don't know how many shares you're buying, but a 50-cent loss isn't a great loss. So again, for common shares only. For options, I would hop down to a smaller time frame. Okay, BBBY, Bed Bath & Beyond, inside bar on Bed Bath & Beyond. We can look for puts at 322, calls at 343. Target to the upside has a lot of room. Target to the downside does not. Now, listen, guys. When I was talking about hitting those targets, I'm not saying that this candle can't open and run to this point. What I am saying is if we trigger down and retrace through that target, make sure you take your profits. So this is one of those setups where we could very well break through that first target. There's not a lot of room there and end up going down to this second target, but triggers at 322, first target at 320. It's 2 cents. Okay, so if we come through that second target and keep going, make sure you stay in that trade, but your stop loss is that target. Okay, BIDU, 2 down green. We're going to look for calls on BIDU, 115.90. And first target, like we talked about, there's that gap fill, so that becomes our first target. We move on to C, which is Citibank inside bar. A lot of inside bars on the banks, guys. So a lot of consolidation today from the banks. Calls at 45.45, puts at 44.31. Again, time frame continuity to the downside looks really, really strong. Now, we marked that first target out. Where does that second target go? So we just go to the next lowest wick, which if we come across, we found it at the outside bar. And then the next target is the next lowest wick. It's that simple. That's the easiest way to mark out your magnitude, your profit targets, where the bulls have their stop losses, whatever you want to call it. But that's the play on Citibank off of that inside bar. 2 down green on Chewy, so we can look for calls at 41.93. First targets at 44.17. We'll move to Datadog. So I really like this setup on D-Dog for a couple of reasons. So we had a 2 up to finish red. So anytime we have that 2 up directional candle that's red, I'm going to look for a trend back to the downside. Now we are already in a downtrend. There are sellers right across the board everywhere. Yearly, quarterly, monthly, weekly, daily, the last hour of the day. There's sellers everywhere. So we're going to look at this as a put at 68.22, first target at 67.33. You guys want to mark out targets further, you can do it right there to the 66.45 mark. And it looks like that is all-time lows for Datadog. So I would like to see it hit this target. I would like to see it hit this target. And you might get new all-time lows. Is it all-time lows? I see this broadening formation here. What is that from? I think that's just an errant line. Oh, there we go. We're not all-time lows. The chart was playing tricks on me. Okay, my bad, guys. That is a existing broadening formation. So this broadening formation was built all the way back at the start of August 20th. And look at where we are headed. I'm going to zoom back in there for you guys. Leave your broadening formations on your chart. Okay, look where we're headed. Back down to the bottom of that. I would almost bet money that we hit the bottom of that broadening formation. Okay, so 2 down, puts at $68.22. All time frame continuities pointing to the downside. I really like Datadog for tomorrow. Let's move on to the DIA, the diamonds, the Dow Jones inside bar on the DIA. I'm going to zoom in here because we are so far out. Calls at 338.33, puts at 335.54. We have good magnitude to both sides. We'll see how the DIA, the diamonds, play out on Thursday. DraftKings. What did I have on DraftKings? So DraftKings, I marked this chart out earlier, and this was green about 15 minutes before close. So it did change, looks like, to a red. We've got full time frame continuity. So if you were looking at something to change, to play off of, then this would be your setup. You'd be looking for a continuation to the downside off of DraftKings. I missed something on Datadog here, guys. I didn't really miss it, but there's some chatter going on around Twitter about whether the candlesticks matter or not. And I've talked about this in a couple videos. When I'm looking for setups, yes, I am looking for this 2 up to finish red in order for me to give confirmation that this is going to trend down. Do I need it? This is a prime example of saying, no, you don't need the color to be red. we had a 2-up green, and the next candle reversed on us, okay? So do we need this candle to be red? We don't. Does it give us a higher probability that there's a reversal in play? Yes, it does. It tells us there's sellers in the stock, okay? But we don't need it, okay? Again, it gives us higher probability, but just because this is 2-up and a green, it doesn't mean the next candle is going to be 2-up, okay? So yes, it matters, but only to a certain extent, okay? So I just wanted to get that point in. We're going to move on to Ford, ticker symbol Ford Motor Company. And again, I got to move this because I marked it out earlier. Inside bar on Ford and a shooter candle or inverse hammer. So actionable signals with the Strat, hammer candle, shooter candle, inside bar. Those 3 candles are high probability plays. We have 2 of them. We have the inside bar and we have the shooter candle or the inverse hammer. We've got time frame continuity outside of the quarterly. And if we go to the quarterly, we are still very green on that. A ways to go. But back to the daily, and time frame continuity for the most part is on our side to trend to the downside. Okay? So we can look for puts at 13.09. First target 3 cents away. Again, that's one of the ones to be cautious of because the next target after that is all the way down here at 12.77. Can we get there? It's possible. We'll see if it happens. Again, just be cautious on this. It is a really nice setup, guys, but the first target is very, very small. So again, be cautious, but still a really nice setup. IWM has an inside bar as well with that shooter candle. So we can look for puts, the time frame continuity, just like Ford, in our favor. And it's a difference of 3 cents again. So do I think it hits that and reverses? No, I don't. So the next target I'll mark out with you guys. Notice I'm doing it at the top because we're filling that gap. As soon as we hit that target, this gap is filled. Okay? That's IWM. We move on to JP Morgan. Let's get there to JP. Again, the banks. Okay, inside bar on the banks. 3-1 setup. Rare pattern. High probability pattern. Okay, so we're going to look for calls at 133.08. Puts at 130.33. KDP, Keurig Dr. Pepper, inside bar, hammer candle. Yes, it's red, but I'm still going to look for this to trend back to the upside. Okay, so calls at 38.01, good magnitude. Puts are still possible. 37.66 is our trigger for that. We move on to Coca-Cola with the 3-1 setup. Okay, calls at 63.72, put 63.25, 2 cents to the downside. So again, pay attention to that. And we'll move on to Lucid. Lucid, 2 down green. We're going to look for calls at 8.74. We are at the bottom of a broadening formation, ladies and gentlemen. That broadening formation was drawn back, way, way back. How far back do I have to? I don't even know how far back that goes. We're going back to May of this year, okay? And we have kind of just followed that line all the way down. We finally tagged it. Does that mean we see a reversal back to the upside? We've got the setup. We've got a 2-2 reversal set up right now. So calls at 8.74. First target at 9.52 on Lucid. Lululemon, not something I usually put on here. They're high premiums. Calls, though. Calls at 377.01. Puts at 369.98 on Lulu. MasterCard, 2 down, green, hammer candle. Calls at 347.85. Another one with high premiums. And the spreads are usually quite far apart on that, but I give it to you anyways. MS, look at this. Another bank, inside bar, shooter candle. Okay. Calls on this at 88.03, puts at 86.71. You guys can mark the targets out. I'll give you the bottom one at least at 86.41. Netflix, 2 down green hammer candle, calls at 309.61. NVIDIA 2 down green, we'll look for calls at 161.86. Oracle has an inside bar shooter candle, puts at 78.58, calls 79.44. Palantir has a two up that finish red, shooter candle, full time frame continuity. This is another one that I really like. It's similar to D-Dog. We're in a downward trend. We had that reversal kind of go to the upside, and now we're trending back down. We'll see what happens here. Puts at 702 on Palantir. Roku, 2 down green. We can look for calls on this at 52.18. Good magnitude. Snap, inside bar, shooter candle, full time frame. We'll look for puts on this one at 9.29. Calls at 9.63. On to, what are we looking at next? Target. Target with an inside bar. Calls at 155.69. First target to the downside, 153.28. Only an 11-cent margin there, so I'd be cautious of that. Upstart, inside bar, full time frame to the downside. This one's interesting. Puts at 16.45. Calls at 17.22 on UPST. If you're still with me, guys, the Fed meetings are coming up next week. If you don't know how to play this stuff, I'm going to put a video at the end. Make sure you guys are paying attention to the Fed meeting next week when they announce inevitably the rate hikes, because they're going to happen. So make sure you guys watch that video. Make sure you know how to play it. Barcat, a guy that I had the one-on-one with today, told me that he jumped in on that last time at 50-cent calls. He sold at 54 and they ran to $7, guys. He told me he missed out on 11 grand. 11 grand because he tried to take profit. I'm guessing he didn't let the candlestick stop him out. Okay, you need to do that. So, again, it's not 100% foolproof, but it is a very, very high probability play of what is going to happen. It's happened like 23 straight times with the last Fed meeting. So make sure you guys are watching that video. Inside bar on CVS. We can look for calls at 102.34. Puts at 101.35. Fairly good magnitude on either end of those. GM, that's General Motors, inside bar. And I call it a shooter candle. We can look for puts at 37.56 and calls at 38.33. I realize this is a longer video, guys, so if you are still with me, thank you very much. I appreciate that. And if you're still with me, you know what? I'm going to give out the top 5 at the end of this, or I'll at least give you a couple bonus plays other than Neo and SPY. If you've stuck with me this long, appreciate it very much. LTHM, inside bar, shooter candle, calls at 25.93, puts at 25.13. Let's mark that target out right there. Full time frame to the downside. Okay, let me give you the top 5 here. So SPY and Neo, I usually have a little bit more time to go through these, but SPY and Neo are going to be on there for sure. Let's put D-Dog on there. I really like D-Dog. Palantir's another one that I really, really like. And usually these drinks, Coke and KDP, usually do really well off of their inside bars. So let's go with, you can take either one of them, guys. Let's go, if I was going to give you a final top 5, let's go with Keurig Dr. Pepper. Okay, that's the top 5, guys. Again, end of this video, I'm going to show you gap plays. I'm going to show you the Fed meeting, how to play that. I wish you guys nothing but the best and green on Thursday. Good luck trading, guys, and we will see you on the next one. Bye-bye.